What's up, YouTube? Welcome back to another video. Inside this video, we're going to be talking about how to use fibs, also how the fib levels work with the premium and discounted zones. All right, so it's going to be a pretty simple SMC video. If you're used to SMC, smart money concepts, Wyckoff, then you probably already know how kind of the premium discounted goes. But for those of you who don't know, we're going to kind of explain. I'm going to give you my insight on it and how I use it, and how I use it to validate my trades and also things like that. All right, so as you guys know, if you're interested in joining the Discord server, link is in the description. Right, if you want a one-on-one session, link is also in the description. I do have an ebook coming out with a giveaway, so stay tuned for that. Pretty much everyone that has traded Forex we all started from the retail support and resistance. What was it? I think it was 0.76 fib level. We all know about that. 0.886. I don't know. I don't remember them, right? But I'm pretty sure we all know about that. The psychological levels and stuff like that, right? But we never learned it as in like a premium and discounted view. Okay, not everyone understood the meaning behind these levels and why these levels are important. Looking at this, let's say this is how the market is moving. Now, of course, we're going to go to the actual markets and give a view of it. This is a bullish scenario. You could do this vice versa for a bearish scenario, so the exact same thing. Okay, we're drawing on our fibs, and I only have the 50% and the 80%. These are the only 2% that I use. Okay, so using the fibs, you can use them in different ways. Okay, you can use the fib to mark out your leg, your structure. Okay, so essentially right here, boom. So this is from this low of this structure point, will swing low, to this point of this structure point. So from swing low to swing high. That's how you want to draw in a bullish scenario. In a bearish scenario, it'd be from swing high to swing low. Okay, so essentially what we have to understand about these fib levels, well, with this fib right here, is the 50% is your equilibrium. Okay, 50% is your equilibrium. So meaning from this swing low, from this swing low to the swing high, 50% of it is right here. This is equal. This is what we want the market to at least reach. Now, me personally, I would like to see the market reach at least 50%, so equilibrium, for a substantial pullback. So if the market does not reach at least 50%, well, it doesn't even get close to 50%, then I don't consider that a valid retracement or a valid pullback. Okay, because we did not truly enter into any discounted pricing, meaning buyers did not truly get back into the market at that area. If this market did not retrace back into this 50% equilibrium, then I do not count that as a pullback. Okay, I do not count that as anything, because if the market did something like this, essentially say this was the retracement, I don't consider this a new swing low. Okay, this is still my swing low, because this did not come into discounted pricing to where I can say that banks and institutions got into the market, because banks and institutions do not want to get into the market here. And it's very key that I say this, because I'm going to explain this even more on when to look for buys and when to look for sales. Like we said it before, we have our swing low to our swing high. The market is now retracing back to the downside. All right, as the market is retracing, we're not looking for buys up here, because we are still in premium pricing. There is no interest of buyers up here because the market is too high. The market costs too much to buy it up here. There's no reason for anyone to buy the market up here because it costs too much. Why not wait for us to come in discount? Everyone loves a discount. Everyone loves a discount on whatever it is, whether it's 10%, 20%, whatever the discount is. People would rather buy things at a discount than at premium pricing where it costs too much, or why buy it there when you can get it at a lower price, right? So that's exactly the mindset that we have to take when we're looking at these markets. We're going to wait for the market to get below equilibrium so we can get the market at a cheaper price. All right. So we do not want to be buying the market as it is retracing, right? Once we get past this 50% and we start entering into this discounted area, this is where you're going to see the market start to range. Once we start the range, you're going to see buyers start coming into the market. This is a sign of an accumulation. Accumulation means you have buyers' interest in the market is changing hands from sellers into buyers. Okay, that's when you're going to have your accumulation, and the market is going to go back towards the upside. We're going to get this accumulation at this discounted pricing, and the market is going to go back towards the upside. So let's say you have this order block sitting right here, and let's say you have another order block sitting right here. All right, this is another way you can use this fib to kind of determine where you want to take your entry. Now, are you going to be more inclined to take this order block or this order block? You're going to have to take this one. This one, right, is above equilibrium, meaning it's still in premium pricing. This right here is in a discount pricing. So I'm going to take my chances trying to buy here than trying to buy here. Okay, so that is essentially what I use for my slingshot candles, because this is in a decisional point of interest. I don't know whether the market wants to buy from here or not, because we still have opportunity to get the market even cheaper. Okay, we still have opportunity to buy it even cheaper. So I'm going to take the extreme area rather than taking this area that's in the middle, knowing that we could just come down here. So it doesn't matter if we invalidate this at all, because we still have the best area sitting down here. Okay, so there's no point of me risking money here when I know the market is most likely going to come down here. Now, I could even show you the other example where I was talking about you can use it for a sponsor candle. And this is what I was talking about. So I have this 63-minute sponsor candle that I was talking about, right? And I drew out the 50% of it, but you can see we barely missed the 50%, right? We barely missed the 50%. All right, so that's that. Now, one more thing I want to say. I want to show you another area where I drew the fib for. It's off of this right here, and you can see where this initial area reacted. And let me kind of show you if I can find it. So boom, we have this huge manipulation towards the upside. All right, we had this manipulation towards the upside, which mitigated this order block right here. Okay. Now, what I did was I drew the 50% of this quote-unquote manipulation move. Look where it lines up, and look where we reacted into. Look where this area came into before we sold down previously, and then you can see we came back and sold from this area again. But I want to show you that this, these fib levels, this premium and discounted pricing, they actually work. So you can see this itself can be a sponsor candle. This itself can be represented as a sponsor candle order block. Now it is on a higher, big, and it looks ugly, but it still can be, because it is a manipulation move. So that's why I drew it out, and that's why I put 80% of the manipulation move, and that just gave me more extra confirmation knowing that we sold at a discounted area, meaning there had to be some type of sellers. I'm sorry, we sold at a premium pricing. We sold at a premium pricing because we're selling. So I mixed it up a little bit, but we sold at a premium pricing here. So there had to be some type of sellers getting into the market at this area. All right. Same thing that goes from here. You can see that we sold at premium pricing. So the market was going to sell. All right. Let me go ahead and draw it back a little bit more. You can do this for a lot of things, honestly. Even this dried down. Right, you had this high to this low here. We broke some structure. You draw it out, you see where we came to. We came just above the 80% of this drive. All right, just above the 80%. Let's see if I can find some more areas. All right, boom. You have this manipulation candle up. Now, this was taken out of a sponsor candle itself, but if you wanted to draw this out, you see where we reached 50% of this. We reached premium pricing before the market went down. All right, I drew it the wrong way, to be honest, but let me draw it again. There you go. We reached premium pricing before the market sold. All right, that's just giving you more confirmation. That's just giving you an area to look at. And even if you wanted to draw this out, look where we reached. We tapped 80%, market went down. All right, we reached an extra premium pricing. We reached premium pricing. All right, the premium of the premiums, I guess you could say. But you can kind of see where I'm going with this. You can do this with any market. All right, the fibs are great to use when you know how to use them. Honestly, we don't use them for entries. We use them to look for entries. So honestly, let's say I wanted to take a sell from here and I didn't know where to take a sell from. What I could do is I can draw out this fib and I can say, okay, once the market reaches equilibrium or 50%, I'm going to see if the market starts to show me some signs that it wants to sell. So it'll show me some bearish price action, some bearish impulsive. If it doesn't, cool. Now what am I going to do? I'm going to wait to see as the market continues above here. I'm going to wait for that bearish move. Guess what you got it here? Right here. Once we tap into the 80%, we see this bearish move that breaks structure. That there goes my indication right now that it looks like the market wants to sell. Since we are in a premium pricing, I'm going to be more inclined to sell the market there. Okay, that's going to give me more extra confirmation to sell the market. So that's exactly where I wanted to get with this. All right, that's where I wanted to kind of get you guys and explain to you guys about the fibs and how you can use them. Now it's not an end all be all, right? It's just extra confirmation. All right, so for the person on my Instagram, and I do talk to you guys on Instagram. So if you have any questions, let me know on Instagram. This video was requested by someone on Instagram, so I had to do it from. I had to do it this week, and I'm going to actually I'm trying to mention him so he sees this video because he did ask for it, and here it is. All right, so I mean, it's pretty much that simple. There's nothing else more to be said, honestly, about it. So I'll see you guys in the next video, and peace out. All right.